GM. GM. Today's lesson, I want to talk about zooming out and keeping a higher time frame perspective. So when you're in the market every day, in a bull market, there's a subconscious bias that hits you where you feel like you should be making money all the time. And you feel like that if you're not making money, then you're not doing your job. Like, I'm supposed to be trading. If I'm not making money, then I'm not trading. But the thing is, a bull market, the opportunities come from the big swings, the big trends. And you can't have big trends without also having periods where it doesn't trend or it trends in the opposite direction. So it's really important, and I'm saying this now almost just as a reminder because it's going to get tempting to a lot of people soon to over trade. And if the market conditions are not right, it's the absolute worst thing you can do. So I'll talk from my own experience. I have absolutely fucked up many trends before, or many ranges. From when I first started trading, and I got long, and the market went up, and I made a bunch of money, and my portfolio grew really fast, like 2 or 3 months, your portfolio multiplies because you're in the right side of a bull move, and then it stops. And because you're not used to that, you're used to every time you buy something it goes up. You first of all keep buying, you keep longing, you long the dips. You look at everything on the 1 hour chart and think this is the bottom, this is the bottom, this is the bottom. You take a bunch of stop outs and then you lose a bit of money. So let's say your portfolio at the peak, I'll use some hypothetical numbers here, right? Let's say you've been holding crypto throughout this bull run so far, and your portfolio went from 10k to 40k, right, over the past few months. Then we've dropped back, and maybe your portfolio right now is 25k because we've had a pullback across the market. Maybe you're holding altcoins that are down quite a bit. And the temptation now, because a few weeks ago, anytime your portfolio pulled back, all you had to do was wait a few days and it was back at new highs. So you try that first. You're like, okay, it's going to go to new highs in a few days. We'll just see. And then it doesn't happen. And then you're annoyed. And you're annoyed because you used to have 40k and now you have 25. And so you try to trade it. You try to trade through it to get back to that number. And I'm certainly guilty of this in the past. Checking my net worth and be like, oh, I've got 50k here. And then the market pulls back. I remember doing this in 2019. I think it was 2019. When we had the Bitcoin rally, the market rally into the 3k up to 14k, the echo bubble. And when that ended, I had like tripled or quadrupled my portfolio, and I remember it dropping back. And that one bled out. If you go and check the chart, go and check 2019, middle of the year. The market went all the way up, bled all the way back down to the lows over the space of several months, and obviously culminated with the COVID crash. And trying to trade targeting new highs was a losing game. I can't stress this enough. What people are doing when they're over trading is they're doing stuff like targeting new highs. And because you think it's a bull market, you will target new highs. But this is exactly what got people fucked up. In June 2019, we topped, and we didn't make a new high again until November 2020. Guys, I cannot stress this enough. June 2019 to November 2020 is 18 months, basically. And because people had been in a really bullish trend, right? I remember it was January, February, March, April, May, June, 6 months, just clean uptrend. Uptrend, buy the dip, up, buy the dip, up, buy the dip. Chainlink was performing really well. Other altcoins were doing great. And people got into the 6 month trend mindset of, oh, I buy stuff, the target is new highs. And then we went into a phase where it didn't make a new high above that for 18 months. People kept long in the dips, targeting new highs. Round trip, stopped out. I don't care who you are. If you don't adapt to the market and we don't see a new all-time high, let's say for 6 months from now, you're going to get chopped up and lose a bunch of money. if not blow up your whole portfolio. Because what happens is, you went from 10 to 40, now it's back at 25, so you try to trade it back to 40. You take trades, but then you get stopped out a few times. And now you don't have 25. Now you have 22. And then the market drops another 10%. Now you've got 20. Now your portfolio is half of what it was. And this is usually where people start to chase. They start to chase the losses. And that's how it can compound. And whether it's over 3 months or 3 weeks or 6 months or 8 months or whatever, it always seems to be the way that just when you've chased it down to nearly zero, then we bottom out and go on a big bull run again. So what should you do if you're in that situation? Understand that the market, the max pain is not up, it's not down. The max pain is going nowhere. Directionless. Now usually, if we've gone up a lot, that means going down a bit too. But people don't lose when the market goes down necessarily. They lose when the market has no clear direction. Whether it's consolidating, pulling back, correcting, sideways, chopping, whatever. Bitcoin doesn't even need to go to 40k right now to wreck people. If Bitcoin goes to 50k, which is only 10k down, it's only another 15%. If Bitcoin goes to 50k from here, but it takes 6 months to do it, and in between it goes up to 65, down to 58, sideways, down to 54, but then up to 60, then back down and sideways, and lots of little pumps in between that trap people. Even if it doesn't drop much in dollar terms, it's the choppy nature in between. It's the false rallies. It's the flip-flopping of bias that's going to take people out. Don't overtrade. There will come a point, probably quite soon, when I say soon, I mean in a few months' time, where the real easy mode comes back, but it has to build energy for that. And you want to make sure that you have as much money stacked up into spot in the coins you like for when that comes. Every time you go to take a trade, a short-term trade in between now and then, just remember that that money could be invested into an alt or into Bitcoin for a 2x, 3x, 5x, 10x if you have patience over several months. If you have $1,000 right now, you're not risking $1,000 if you put it on a trade. You're risking potentially 5 or 10,000 because you could just buy in to a strong alt with a good narrative, and if the market goes back up, which that's why we're here, lots of stuff will go 10, 20, 50, 100x, but not right now because we've already just had that. There has to be a cool-off phase. And if we do get another big run, it's probably going to be even bigger because if it's towards the end of the bull market, the last leg is the biggest, the most aggressive, the most parabolic. So if you've looked around the last few months and you've seen Whiff do 100x and Bonk do 100x and Pepe go 15x in 2 weeks and all these big moves, there's going to be all that plus more, but probably several months away, could even be next year. Have a core, right, of your portfolio, whatever money you have in the market. Make sure you keep 80% of that in spot. Whether it's in stable coins or in just long-term spot bags, keep it there. Resist the temptation to trade with it. Trade with a smaller percentage of your portfolio. And if you make profits there, reinvest them into coins. But really, really, really try to not touch those long-term bags. Remember when you bought with a long-term view? Don't allow 2 months, 3 months, 6 weeks, 4 months, 6 months, who knows. Don't allow this potentially choppy, downwards, grinding phase to get you to throw that money away. Because once enough people have done that, once the market has shaken them out, we're most likely to go on a big, big run. And you want to have your bags packed for them. Patience, discipline. Patience, discipline.